This was when we started picking at it like 480. Hey everybody, hope you had a great trading day. So I just want to focus on this post that I made, and then I want to get into about 5 ideas I think we need to cover, and then we're going to spend some time on the indexes and what you need to be focused on. So I put this post out today to kind of put this in perspective. And I'm going to explain why I'm not overly concerned about a couple things here. But, this is the pandemic, okay? And this is what happened during the pandemic in the SPY. Now, this is just a daily chart with the 21-day in for just so we have some kind of basis. And this was that famous Ackman statement, hell is coming, everything's going to fall apart, where he was basically crying on TV about how bad things were going to get. Okay, here's the date just by marking this on March 27th, 2020. Okay, he did 10 days ago. I mean, if you really come out and mark where you're at, he essentially called the bottom of the entire move. Now, we're seeing this play out again similarly right here, aren't we? Okay, with, there's storm clouds coming, Jamie Dimon this time, it's a hurricane. Well, they weren't saying it was a hurricane 20% ago. They're saying it's a hurricane now. So I want you to think about this for a minute and realize that these people are actually on the other side of the trade. Okay? They're not out there trying to give you information so that you will act in your best interest. They're trying to give you information so that you will act in their best interests. Sadly, that's just the case. But statements like this, to me, are completely outrageous, where you're saying you better brace yourself. Is this what you're telling your private clients? Probably not. It's probably not what your private clients are doing. Your private clients are probably hedging some way and probably picking away at other names. So just something to think about, something to really focus on. Now, stay to the end of this video because I want you to understand why I'm not remotely concerned about where we are in the S&P right now. We could always roll again, we can always retest, but we are seeing some signs that we may have actually bottomed and be more like this date than this date. So just stay to the end. But let's go through some names so we can just have an understanding of what's going on. I want to point this one out as everybody that's been following for some time, and subscribe to the channel if you don't, because what we go over here is extremely timely. And you don't want to be looking at this 2-3 weeks later. It doesn't hold the same value. But look at this move. Okay? We could never even rally on Carvana. Now, what's really troubling about this, if I was a Carvana holder, is that there's literally no rally whatsoever. None. So this is telling me that we're probably going to break here. Now, if I overlay this with something as simplistic as RSI, and I see that this is trading down, and RSI is having a hard time even staying over 30. And this is a little more advanced, but if you're having a hard time even staying over the 30 line, that's telling you that we're heading for massive underperformance. So I would not be surprised to see either a news event or some secondary or something come out that really knocks this down. I think you're going to be the next Vroom is where I really think you're going, and we all remember that one. This one's down 97%. I see no reason to assume that Carvana is not heading the same way. Remember, Carvana loses, I believe it's around $3,000 for every car they sell right now, based upon what it costs to run the company. So all you're looking for is a lower low tomorrow, and then you could just, I think that the trade's theirs. Everyone that's been following for some time, we've been on this since well over 100, and I continue to short it and think it's worth 1 or possibly less with the capital structure that's going on out there right now. AMD should be your barometer for what's going on in the markets, especially technology-based. We've come out with earnings. Earnings were actually very good. Guidance was excellent. You couldn't have done any better with guidance. I got flim-flammed on this today where we came down, took out that 99.69 level and then pulled right back. And I want to show you this because this is exactly the game that goes on when you're bottoming. So let's get rid of all these, not all the annotations, let's get rid of all the segment lines for a moment. So this is that 99.69 level. This is the undercut, rallies, undercuts, perfect double bottom. So here you are, undercuts, comes back down, takes out the high, that was it. So, and if you were overlaying this with RSI, you can see pretty clearly your little mark down here where you're under 30 and then back over it. Watch that RSI video if you haven't. I'm pushing that really hard right now because in the trading room, people are doing fairly well utilizing the very simple strategies that are in there. But I really like this on the long term. And I think that if the market turns, which it will, eventually it's going to go up. But I've got a curling 21 day. So that has my attention. There's a massive, massive line right here that you should be paying attention to as far as a wedge line. There you go. Let me just show you this. So you could say the ones up here, right, that you are that high. There's another one right down here. It's a little lower that you're butting up next. But you need to start breaking one before you can break the other, right? But I like this a lot. And the fact that we're not breaking down on news like I showed earlier, and that was kind of the purpose of me showing that news with Jamie Dimon, that, look, we're not falling apart, are we? Okay, we're actually hanging in there. Now, you can always go lower, but there's a lot of indications that that's just simply not going to last right now. But I do think it's important to understand that there are certain stocks that look like they're going to go lower. This is one that we talked about yesterday. I posted this in the trading room. And the reason I'm bringing it up again is because I don't think that this move is over. We started shorting this. We've been playing around with it for some time, but right around the 74 level, 75 level today, once you broke that doji on that wedge line, that's all you needed to see. I'm just looking for continuation on the way down. And what you're looking for is roughly, I think 42 is your first stop. So there was a really good podcast done. It's actually in my Twitter feed. The Twitter feed's Arete Trading, and you can pull it up, where Jim Chanos is on this podcast and he walks through why he thinks it's worth $20. And one of the things that's very interesting about Coinbase is they make about 4% on assets under management. If you look at something like Schwab, a traditional person, or a traditional brokerage rather, it's 25 basis points. So they're just going to have massive multiple compression. And I get that now, massive revenue compression. And as that continues, there's no way they're going to be able to grow. They're going to have to lay people off. And we all know the ongoing concern statement that they just happened to issue last earnings quarter. So for me, I think that this can get to 40 fairly quickly. Along with that, this is really a Bitcoin trade, but MicroStrategies was another one that we shorted actually yesterday into this rally, but I just think that this is starting. If we can get to a point where I break this 21, get down to this doji, I can get back down to this 123. In today's live call, I actually worked through that in the pre-market live show that we do every morning at 8:30 that's open to the public. But what we saw right here is we saw a really nice move, right? See this little area right in here? So why am I showing you that area? Well, I'm showing that area because this is when they started buying Bitcoin. Okay, so since they started buying Bitcoin, you're still up over $100. And their cost on Bitcoin is $31,000. So they're trading up $100 to their core business, even though they're break even on their Bitcoin position, right? So just on that alone, you can see how someone could look at it and say it was overvalued. In regards to Facebook, to me, this is the nail in the coffin. Again, I did a little long trade on it to just scalp, but this is the nail in the coffin to me. Things like this, when you start seeing Sheryl Sandberg leave, the COO, this is the beginning of the end for companies like this. When the leadership starts leaving, C-level people start leaving, they just see the writing on the wall. And she knows more about the business than anybody else. She's the chief operating officer. So if she's leaving, she's not leaving because she's going to come up with personal reasons or something, but she's leaving because the writing's on the wall. So just watch this 187 level. If you get below that, that's major support. We should probably talk about Tesla and just watching this 21 day and how we held in here. And just look at how you held in here. You held in here really nicely. So maybe we're going to break tomorrow, maybe not. The level that we had to close above was 734.23. All I see is a possible flag being built on the lower end of a trend line. So maybe the flag will build. Maybe this will take some time. When you're making bottoms, and I'm not saying that you are making bottoms in all these names, but when we go through the SPY, you'll see what I'm talking about. It takes time. You just don't go straight back up. You have to build a base, and that requires backfilling and then rallying. Backfilling and rallying. And people shorting again and thinking they're supposed to be short and then getting stopped out, okay? So that's just something to consider and something to think about. And I do want to just touch base on this. If you've been following for some time, I get asked to do this a lot, to go through stocks that we followed that are in these top 5 videos that are done on the weekdays, Monday through Thursday. But this was when we started picking at it like 480, and we've been in and out, and I just put it in the newsletter again. There's a free version of the newsletter in the description, link in description. But where am I going with this? Well, they're going to start issuing more and more dividends. And as that continues, as the dividends go up, as oil goes up, right now we're probably at $1.15 to $1.20 a quarter is where my estimation is. It's roughly 1% of whatever crude's trading at is how the dividend's been coming out, and they have the ability to increase or decrease it. What I like about this is how long is this going to trade at 20% dividend? It's not. It's going to eventually get itself into a position where it's going to act like this. Okay, and it's going to take 2 to 3 years, but that's where you're heading with this. All right, this is when oil spiked the last time. This is when oil was at 150. You can see where we are now. We're nowhere near those kinds of levels. So this has a lot of room left. But I really want to focus on the SPY and why I think that this could be the beginning and not the end. So there are a couple of indications that are going on. This March rally that ended. If anyone has any tips with this system, this is TradingView, please comment below and let me know. So that March and how we lined up and see where you are. This is the McClellan oscillator. What this measures is momentum of breadth. So essentially this is measuring the momentum of the advancing decline line. And that's really important because it shows the health of the underlying market, and it also can be a precursor to what's going to move. Hence, it makes it a leading indicator. Now, you can see where you're at March and see where this line was. But if we go to where we are right now and we go to where the McClellan indicator is, we can see this very clearly, right? This is where we were the last time we were that high. And if you keep going back, this will take you to 2018 when we came in. So anything that is over this level is of substantial importance. And roughly all I'm using is 100. And you can see this has only happened 3 times. This is the 3rd time. So it's very difficult for a market to drop if you're going to be in a position where that market has this kind of breadth momentum behind it. You can pull back, but those pullbacks are going to be met like they were today by buying. And that's one of the things that I'm really hyper focused on here. Even today's pullback was met by buying. On an RSI basis, we are nowhere near where we were on those March highs. If you take a look at that right here, this is where we were. We're just barely above 50. We're just getting started on the RSI. You can see how this peaked out. Now, if we were a little higher, that might be a concern. So what you could do is you could always look at a smaller time frame. So you can see this peak right here on the 4-hour and how we were over, and how that marked the high, right, of the last move. We're nowhere near that even on the 4-hour. So I don't really see any signs whatsoever of any comparison that we are tired. Now, that doesn't mean that you can't go sideways and backfill. And that's exactly what I think can happen. But I just don't see the same kind of downward pressure aligning itself up yet that we had to deal with. Couple this with what we went over yesterday. Couple that with the positive divergence in the advanced decline line, which is pretty rare. I don't see how this cannot at least backfill and base for a period of time, which gives us the opportunity to invest in certain names. That's worst case scenario, is I think that we wind up going flat or coming down and retesting. I just don't see it with the level of breadth that we're seeing, the momentum of breadth that we're seeing. So that's where we're at. It's going to take a little time for us to figure out exactly if we're right or if we're going to need more backfilling. Obviously, if the 10-year gets over 3%, that's going to be an issue for us. We're going to have to watch that, make sure it doesn't happen. Please comment on this video. Your comments are how I create content. That's why you're seeing this switch up a little bit. As I stated earlier in yesterday's video, the trading room is open for enrollment, probably for another week, and then I close it. Last time it was closed from November to June for open enrollment. So if you're interested in that and getting specifics on what we do in there and specifics to entries and exits, maybe something for you to consider. And there is a link above for you to preview it. That's it. That's all I have. Everyone, trade to win tomorrow. And stay safe out there. I know it's been a war zone lately.